Pests beware, your fields have heroes. The Pests and Predators podcast is brought to you by Field Heroes and is powered by the Western Grains Research Foundation. Learn how beneficial insects fight pests and protect your crops. Visit fieldheroes.ca today.
Let's talk markets here on this Wednesday as everyone's cruising through the field on a planter seeder or possibly even a sprayer. Joining us right now is Brian Comeault. He is one of the partners with Ireland Comeault Lafoy. How are we doing today, Brian?
Good, Sean. How are you doing?
Pretty good. Okay, so let's talk about some of the fundamentals. What I guess as we sit here at the back end of May, what do we know fundamentally about this market?
We know, canola is relatively tight, and I mean, we could debate the Statistics Canada numbers. I'm sure there are some that are, whether it's production or the on-farm storage, things like that. But you could just feel it in the marketplace. You can see it in the futures market as it, we made some new highs on the November just yesterday. We pushed back towards old highs on the July contract yesterday as well. Both of those are coming off a little bit today, but we're still, high in the box as far as pricing goes. And the charts, kind of tell a story there about where we are fundamentally on canola. Statistics Canada reported that there was about 4.6 million tons of canola in farm bins at the end of March. And astoundingly, farmers delivered 1.92 million tons of that in the month of April, at least according to Statistics Canada. Add another, almost 750,000 tons in the last 3 weeks that the CGC has reported. That leaves us with only 1.9, million tons in farm bins if you're using those numbers as metrics, which that is tight, especially, at the end of May. May is generally a slow delivery month because of seeding and all of that kind of thing. But June and July can pick up quite substantially. We have been seeing, some crush plants and such, issuing premiums and things like that. I find that it particularly comes into play when, maybe when the market is off a little bit, farmers aren't participating in selling, or if the market is pushing higher and they want to kind of give that little extra boost to get to those, target prices, things like that. So, the fact that there's still premiums floating around at this time of year, I think is also a signal that supplies are tight, or it's hard to get farmers to open the bin doors and sell canola, likely because there isn't a whole lot of it left.
Yeah, well, and you look at that November 25 chart on canola, man, it's especially the yearly chart. Like it's just I don't call it a rocket ship, but farmers probably want to see it go a little bit higher. But we've been on a run here, and so there's the fundamentals which are telling us one thing, but then you look at the from a chart technical perspective, you're like, ooh, is it a little too steamy? Is this the is this the time where that inventory should be even tighter hands, and we got a long ways to go up from here, or is this a risk management approach where okay, it's been a pretty good run, I better not get greedy here?
I mean, we did advocate for adding some coverage and taking some risk off the table when we got to those previous highs. That wasn't because we were necessarily turning negative or turning bearish, but that is a good discipline play, right? You add to your coverage levels, whether that's old crop or new crop, and then you make a plan B, whether that's using option products or derivative products with a broker or something like that. Those are things we advocate for. Floor pricing strategies, things like that are really good decisions at when markets are pushing towards previous highs. This market from a charting perspective, there's some things that are underpinning it, right? We've got good crush margins, or at least relatively speaking, in the new crop position, and we have more crush capacity coming online in fall. So, there's going to be more competition for some of these for canola specifically. We get kind of this yo-yo action on the 45Z or the U.S. Biofuels policy, which kind of can ebb and flow the market to some degree. But the last piece of news was relatively positive, and canola's back in the fold on 45Z. So that, the U.S. being Canada's number one customer for canola oil is helpful to that market. The U.S. is a very important partner for us for canola oil and canola meal. There hasn't been any signs of slowing down, the exports of those products to the U.S., even with all of the recent tariff, talk and chatter and stuff like that.
Well, yeah. Like, speaking of the tariffs, how do you reconcile the movement we've had with those tariffs? Are those tariffs having any impact, or like reconcile this for us a little bit? Because I think what's happened is a little bit backwards to what people thought, because the tariffs got placed on that Friday. Market shoots lower. Everyone's talking about compensation and, look at the market loss because of EVs. And then as of about a week after the announcement, we've just kind of gone higher since then. So what's actually happening here behind the scenes from a buying perspective from China?
Well, what happened was that tariffs never actually took effect on canola products into the U.S. So, yes, China put tariffs on canola oil and canola meal, but they left them off canola seed. And but even before that, China had not been a big buyer of our canola oil and canola meal. But we continue to ship them canola seed without a tariff. The U.S. never did place a tariff on our canola oil and canola meal, primarily because those are products that are included in the free trade agreement, or the USMCA, or whatever acronym it's called on either side of the border. But so I think the industry just was kind of looking at it going, business as usual. Let's get the business done. And I don't know if you want to call it front loading or just regular course of business, but the demand for the oil, the meal into the U.S. and the seed into China is still there, and none of those were affected by tariffs. So we kind of, it kind of dodged a bullet.
So there's been lots of rumors circulating about, that when those tariffs went on meal and on oil, that, seed was going to happen at some point. This was, so that's the next step. Is that when you're talking to people on the ground in China and traders in the industry, do people still think that?
I think the risk has come off significantly of that. And it's likely because China has larger problems on the trade front than Canada EVs, right? And so, maybe a prioritization on their part in trade agreements with, the US or with other parts of the world are occurring. And so the issues, facing Canada and China's trade relationships have been put significantly on the back burner.
When we've got canola at 700, are there substitutes? Like, at what point is it like, canola too expensive?
Yeah, there absolutely is substitutes. Soybean oil is a substitute. Obviously, palm oil is a substitute, at least for the biofuel sector. For the food sector, it gets a little bit more interesting because there are traits of canola oil that are unique, and deals have been inked based on the health benefits of canola oil, things like that. So yeah, there is some ebb and flow, but we have seen strong soybean oil pricing as well. And and for a while there, it did look like that soybean oil was the propellant for canola to move higher. What we've seen recently, though, is a little bit of a divergence. So canola is pushing higher, even though soybean oil is kind of remaining stagnant. So in that regard, yes, there's a potential that we are kind of bumping up against some resistance here, or it's harder for canola to rally without the help of soybean oil, but obviously it's not impossible for it to do so.
And the whole biofuel industry waiting for, what are those RVOs going to be? And there's a lot of speculation out there. Well, we all just wait with a lot of anticipation. When we have, from a biofuel front, though, if we have oil trending lower and soybean oil and canola oil headed higher, is is there a point here where we hear some squeaking and squawking about that?
Yeah, I think once we get ethanol prices and other biofuel prices, in the area where they are getting cheaper and it's too expensive to substitute in, like price is the determining factor of everything, whether or not it is environmentally friendly or not. At some point, price becomes the largest point of discussion. I mean, today crude oil's up, pretty big. It's kind of been trading sideways, for the last couple of weeks. So it's kind of been a non-issue, particularly, for the canola market. I think the canola market currently is pricing in Canadian fundamentals, most heavily. I think if the other products start to back off or start to become less of an issue, or less of a propellant for canola, I think what will happen is you'll see a switch to basis having to do that. So,
okay.
The buyers have been, relatively soft on basis recently. I think if you look at the Alberta Wheat Commission, they report basis is something like -18. What we are seeing in real time is probably, 0 or option to, +5, maybe a little bit higher than that in some areas in the West. But by the end of this crop year, if futures are going to stop doing the work, I think we're going to start seeing basis step up and do some of that work as well.
Well, and speaking of Canadian fundamentals, we'll get the final call here on what the acre number is, but the dry bias that so we start to talk about the production and where that all shakes up with that story's still yet to be written. I guess we're going to know a lot more when we get to into July.
Yeah, I think I do think there were some acres that shifted out of canola, but they may have somewhat shifted back in.
Yeah.
I was talking to a flax trader the other day, and some small acres in Manitoba, for example, went from canola to flax. But I do think the early planting season that we've had this year does favor planting of the majors. So, what I call the expensive crops, the canolas, the wheat, things like that. Where you tend to get shifts is in late seeding years when when you get shifts to barley or shifts to oats or things like that. So I think, it's kind of maybe a bit of a balance. The early seeding favors higher canola acres. Maybe some of the trade disputes earlier on in the year, favored a reduction of acres. So maybe we're kind of at the even mark. I'm not sure.
I'm tempted. Now, this is incredibly unscientific, but I am very tempted to take the over on what our expectation is on the canola number, because one of the things I'm hearing from the field is a little bit different this year. Is usually Christmas is like, you talk to some of the seed companies, it's like, we're hoping for some in-season sales, but typically what your sales are December 31st is kind of where the number sort of shakes out. Hearing a lot of in-season sales this year from some of the canola seed companies. Again, anecdotal, not scientific. So we'll see how it all comes.